Welcome to the Atlantic Current. I'm Vince Martin from Wall Street in Maine. Here, as always, with Tull McAdoo from the Irish Politics newsletter. Our topic today is the stock market, cryptocurrency, and investing/gambling more broadly. We're going to talk a little bit about how in the U.S. all these terms are kind of merging. This idea of, quote, the stock market being a thing, being something that's part of the news cycle, that's part of conversation in pubs. That's very much an American thing. Is that an Irish thing as well?
Ireland has a stock market, Vincent, in the same way that we have sunshine. Technically, yes, but you wouldn't plan your life around it. Okay?
Fair enough.
And it's been around a long time. It's been around since 1793, Vincent. I think it directly employs maybe 3,000 people thereabouts. So compared to the United States, it is a very, very small fish in a big pond.
And for individual people, investing in stocks is less common, I think, there than it is in the U.S.
Yes, we spoke a bit about gambling in our last episode, and I think the stock market in Ireland is seen in somewhat similar fashion. You're gambling, essentially.
Right.
You know, the stocks, share prices, all that, yes, we're bombarded with it from the United States. Of course, we can't escape it. When the stock market in the United States drops, we sit up and take notice here because, you know, jobs will be lost or, you know, it has direct consequences on the many multinationals in Ireland.
Of
course. Yes, we do notice it, but ultimately shares are something that our pensions go into and we kind of forget about it till we hit 65.
That's interesting. Yeah, the stock market in the U.S., even with a couple quite famous busts in the last 30 years, which we'll talk about a little bit, still has a pretty positive perception in the U.S. I think you will find people go, oh, no, that's just gambling. But for the most part, it's seen as socially and individually positive. So we have, for instance, in our high schools or even middle schools, you will have teachers that run stock picking contests where their students, you know, pick stocks. And obviously it's imaginary money. They track their portfolio. But there are very, very few people in America who would be offended that you were teaching 15-year-olds how to invest in the stock market. The overwhelming majority of Americans, even those who didn't themselves own shares, would say, oh, yeah, that's absolutely something that you should give high school students exposure to because it's part of being an adult. It's part of being an American. And the numbers, I think, kind of back up the idea that there is a different perception.
That is hyper capitalism, isn't it? Teaching kids how to trade stocks at 15 years of age. It's something you would not see it in Irish classrooms. It'd be front news headlines all over Ireland if some teacher tried to do that, I'd imagine.
That's hysterical to me. It seems so normal, especially like you're using imaginary money. I mean, if you were making the kids work all summer and raise their own $5,000, or like the 3 kids who lagged behind got kicked out of school, then I think we might notice. But yeah, that's interesting. Yeah, we see it as mostly a force for good. Let's put it that way.
We've a rather benign attitude to it. I mean, without realizing it, a lot of people who have pensions, they are investing in the stock market. They're just not aware of it. You know,
right?
They have brokers doing it on their behalf and all that. 36% of all Irish adults say they hold at least one investment product. You know. And 53% say they do not invest at all. How do those numbers stack up against the United States?
The U.S. is quite different on that. And we should say up front, a lot of these numbers are kind of going to be fuzzy. But I think right now, about 60% of American households directly own stocks or bonds.
Whoa.
Yeah. So it's a big number. And then we also have other programs such as 401ks, which are investment products that are tied to your employer. They have basically replaced the old school pension, defined benefit pensions.
Yeah.
You get X amount of dollars once you retire. And companies have gotten away from using those. Instead, they have 401ks, which have tax advantages. You put your money in, the company puts money in, and then that money gets invested. You can't just put it into anything. You have a small menu of funds, stocks and bonds and gold. The crypto people have been trying for a couple of years now to have crypto part of this, which has created some very interesting debates over whether Americans should or should not be putting their retirement assets in crypto. And if you don't have something through your employer, you can use what's called an IRA, an individual retirement account. And the way an IRA works, quite simply, is
they don't bomb mainland Europe.
Yeah, that's true. Different. That is a very different acronym here.
Right. There's two different IRAs here.
Yes, there are.
And there's an American version and an Irish version, okay? So Go on, Vincent. Sorry for interrupting.
I was about to say there's two different IRAs here, and Jerry Adams isn't in either of them, right? But yeah, an IRA, you can invest them most ways that you want, but it's run by you. And basically what it is, when you put the money in, you don't pay taxes on the money you contribute.
Okay.
You build your wealth without paying taxes. You pay taxes when you take it out. And we don't need to get in the weeds there, but even those programs show how American society views the stock market. I mean, we have the government creating tax incentives to have people put their money into the market. You know, the only one red line we learned earlier this century, was when George W. Bush wanted to replace Social Security with a similar scheme where people invested their own money.
Right.
And that proved to be a bridge too far. We kind of like that idea of having Social Security being completely safe and seniors being guaranteed a payment once they hit retirement age. But other than that, we generally think it's a good thing to put your money in the stock market.
Yeah, they call Social Security the third rail of American politics.
Oh, yeah. Yeah.
You touch it and you die.
Yep,
Touch
exactly.
it and you die, yeah. Now, you see, analysis here across Europe and in Ireland has shown that Irish retail investors has the lowest participation in the whole of the Western universe, the Western world, the Western economy, OECD economies. Ireland is the lowest. Nobody kind of invests on that kind of scale that you do in the United States anyway in Europe, but Ireland, even by European standards, is incredibly low. That's probably got to do with low financial confidence, cultural preference for hiding your cash under the bed. They've been deeply suspicious of any kind of institution, I suppose, let alone where you're handing your money over and the potential is there for it to be lost, you know. So, and they're quite opaque. Some of these financial instruments are very opaque. They're very hard to get your head around, and there's lots of pitfalls, lots of ways you can lose your money, and Irish people are traditionally wary of those kind of institutions, you know. And especially since the crash, nobody trusts banks for anything anymore.
Those events always have a very long life. The Great Depression here in the 1930s, where a lot of banks fell, even anecdotally, you'd hear stories 50, 60, 80 years after that happened, you know, of people who literally still had cash in the walls or who wouldn't give it to a bank. Those things really do change societal attitudes. They cast a very, very long shadow.
Now, Vincent, to your point, Irish people have record savings of 163 billion on deposit with the banks, okay? Now, the banks are not giving over, you know, great interest rates and everything like that, which highlights how suspicious Irish people are when it comes to investment.
Yeah.
Now, the Irish government is talking about and seems intent on bringing in a government investment scheme to put Irish people's money to work. Okay, so I don't know what their plans are there exactly, but it looks like to go the 401k model like you suggested there. Some variants of that anyway. The details haven't been hashed out properly, but the amount of money on deposit is eye-popping for a country this size. 5.5 million people and 160 billion on deposit.
Yeah, the figures from the Central Bank of Ireland suggest it's about 38% of Irish wealth is in cash or in bank deposits, which to American ears is bananas. The figure in the U.S. here is about 11%. So yeah, and that's a huge difference. I mean, people here are much, much more aggressive in putting that money into things that have some risk. And that includes the stock market. And as we're going to talk about a little later, that increasingly includes cryptocurrency and other areas of the stock market. You know, I think there are some people in the U.S. who are starting to ask right about now if individual investors are taking on a little too much risk and having a little too much fun. But do you think even the political history of Ireland, a little more upheaval, younger nation, do you think that still casts a shadow, or is that just a modern cultural thing?
It's a modern cultural thing because the age profile of these savers are, you know, obviously weighted towards people in their middle ages and later on in life, because the cost of living is so burdensome at the moment on, you know, the 18 to 30 cohort that they struggle to accumulate proper savings, anything significant to make a difference. And when they do save, it's often for a specific purpose, such as a home deposit or, buying a car or whatever the case may be. The distrust of financial institutions, there's two things I always come back to in modern European history is the crash and social media. One feeds into the other, and there is a very low trust in banks around here. And that's all that is. It's all. I don't think it's a cultural colonial thing or anything like that. I think it's just a case of we do not trust banks.
With some reason.
Yeah, well, I mean, yes, the crash has left an indelible scar on the psyche of this nation. And you have to realise there's very little banking competition. We've 3 banks for the whole country. I think you have 3 banks per city in some states, don't you?
Yeah.
We've 3 banks for the whole country, Vincent.
Wow.
So that's not very healthy for competition. Not very healthy for competition. And we've Revolut come into the market, N26 also in the market, a couple of other fintech disruptors and the like, and that's making a bit of difference because they're offering more attractive rates. And you could trade crypto and shares with the flick of a switch on your phone. So there's a lot of that going on at the moment, retail investing and stuff like that. Is Revolut as popular in the States?
Has a presence here. It's way behind kind of the domestic, but we have versions of that. They're all trying to kind of be an everything app. They all started in one spot. And so Robinhood's trading. We had SoFi, which started with loans, and they're moving into banking. The payments companies are buying banks. They're all kind of converging into being sort of everything financial supermarkets.
Who regulates these people, Vincent, in the United States? Who's oversight there?
Depends a little bit. There's community banks, major banks. The Federal Reserve has a big role. We do have pretty good banking regulations, I think. Some American listeners might go, hey, what the hell are you talking about? We just had a financial bubble in 2006 that the regulators missed. That's a very, very long, detailed story. But yeah, there's different regulations at different levels. There's some state work too. But at its core, particularly for just straight banking service, we have deposit insurance. So if you have up to $250,000 at a bank and the bank fails, the government will give you your money back. So you don't have to worry about that.
That sounds like an American solution to an American problem, Vincent.
Yeah.
We very famously have an Irish solution to an Irish problem, which means it's usually something opaque and doesn't really work anyway. And the further we go into these podcasts and stuff like that, I find there's actually an American solution to an American problem also, isn't there? Multifaceted regulatory authorities and that kind of thing, you got your state, you got your federal, and you may have it at some other local level also.
I mean, for the most part, it has been a success. We had a bank blow up. You were criticizing social media. You'll kind of appreciate this, that we had a major bank blow up in 2022, Silicon Valley Bank. And you can argue that social media made that bank blow up. The short version of what happened is when interest rates go up, the value of an existing bond goes down because the rate that bond pays now looks less attractive. So Silicon Valley had a huge portfolio of bonds that on paper were worth a lot less. And for the most part, they can just kind of let it ride out. They're going to lose some profit, but it's not a big deal. But people got on social media, including a number of major venture capitalists, and started repeating claims, which were somewhat true, that basically on paper, the bank was insolvent.
Yeah.
And they started a bank run. If you've ever seen it, It's a Wonderful Life, bank run, everyone pulls their money out, and all these companies in Silicon Valley pulled their money out, and the bank wound up going bust. And there's actually like specific people on Twitter you can call out for causing this whole problem. But
yeah, I remember that. And these things fascinate me, how they interact with social media, because social media just fans the flames. And I remember thinking, you were watching a bank dissolve in real time. You just refresh your feed and price was going down and down and down and down and down and down. And it was a sight to behold, to be perfectly honest, that like a bank brought crashing down via social media.
And a bank that was quite large and not nationally important, but certainly a bank that serviced companies that were nationally important. I mean, there were multiple major tech companies who had funds there, who got loans there, who had projects funded by that bank. I mean, it was not some rinky-dink bank with 2 branches in the middle of nowhere. It was a legitimate financial institution that, like you said, Twitter brought it down. It really was something to see.
That's what makes Irish people so suspicious.
Yeah.
Of institutional investing. And I suppose this goes back to all the way back to the great Wall Street crash in the late 20s. When the crashes happen, the global crashes happen, they originate in the United States. They originate from Wall Street, don't they, usually?
Yeah, it's usually our fault one way or another. That's true.
It's a long history of it. I mean, no, in fairness, the United States wasn't the only country exposed to the subprime crisis. I mean, Ireland had its own housing crisis going on there also. We were playing, blackjack and roulette with flipping houses, as you call them in the United States,
Of course, yeah.
With our Polish housekeepers and, our holidays in the exotic places like Bulgaria and buying apartments in Bulgaria. And I didn't buy into it personally, but I'm too mean. The wife will tell you that. I'm a very mean man. And I didn't buy it, but I remember thinking at the time and speaking to my father, God bless him, and he's saying this was crazy. He said he said he knows guys who aren't the sharpest tools in the box, never were, in fact, and they have like 7 or 8 houses.
Yeah,
It's somewhere like Moldova. I mean, we were gripped by the same frenzy as the United States was, so the United States is not uniquely at blame there either.
No, although we did kind of build the system that allowed so much of that to happen.
I wrote an article about American-induced financial calamities. So this is why Irish people, and I think the rest of the world, are very sceptical about financial investment. So you had the panic of 1907, Theodore Roosevelt.
Yeah.
When he wasn't too busy breaking up monopolies and wrestling bears, to notice the financial system was essentially collapsing around him was one. The Great Depression, obviously, Herbert Hoover. That was the most famous one. Parallels here now with 1973-74 crash, OPEC, Nixon, Gerald Ford.
Yeah, people have definitely made that comparison lately. Yep.
Black Monday, Ronald Reagan,
1987, the United States stock market fell 23% in a single day. It is a statistic that to people who didn't live through it, it's almost like impossible to believe that it happened.
It spawned some great movies like Wall Street as well, didn't it?
Yeah, and few suicides that day, unfortunately. There are always like kind of tropes. People jump out the windows, but there actually were stories of people who just couldn't handle it.
Good grief. And that's your free market. The dot-com bubble.
Dot-com bubble was a fun one. That was my first job. I was actually training to be a stockbroker. I started in 1999, and the bubble peaked on March 6, 2000.
Whoa.
So I watched it go all the way up. It was not great for a lot of people, but I had no money and really no direct investment. So it was a fascinating life lesson. It is amazing that I invest in stocks at all, having seen what I saw. It was just nuts.
The NASDAQ fell 78%. What's the NASDAQ? We see that here in Northern Ireland because it's directly related to tech companies, isn't it?
The NASDAQ is a rival to the New York Stock Exchange. It started several decades ago. It's trades slightly different. We don't need to get into the details. But because it was newer and a little more innovative, it tended to attract tech companies to list on it. So very broadly, the New York Stock Exchange, you sort of think of like older, better known, staid manufacturing companies, and NASDAQ tends to be younger, newer tech companies. So the NASDAQ composite, it basically tracks how all companies listed on the NASDAQ are performing. The other one you'll hear is the S&P 500, which is, this is not technically true, but for our discussion, it's good enough, is basically the 500 most valuable public companies in the U.S. So if you hear those two indexes, they're basically telling you how those groups of companies performed that day.
And again, of course, we come to the 2008 financial crash, George W. Bush. But quite frankly, it was probably Bill Clinton that kicked that off, wasn't he? He was just caught cold in the can, for want of a better word.
Yeah, I mean, we're still arguing about that, whose fault that was. I don't think you'd actually blame it so much on Clinton, to be honest with you. There has long been a Republican talking point that under Clinton, the federal government changed rules to support more home buying by racial and ethnic minorities, and that was the problem. And if you believe that, you spend way too much time on social media with people who are trying to make a point. I mean, the idea that that's what happened is just ridiculous. And it's ridiculous from the sense of like lived experience. I was on the coast of North Carolina then and watched, vacation homes do the same thing. The same thing you're talking about in Ireland. We were sitting there going, this is nuts. People are lost their mind. We had a family member that someone bought the house next door, painted it, cut down a tree, and sold it for an extra $100,000 in like 7 weeks. I mean, that's got nothing to do with some federal program. That's just people lost their minds.
Well, I mean, the banks were lending money to help the people who couldn't spell mortgage, right? And they bundled these loans into something called AAA rated securities, yeah?
Yeah.
And then acted shocked when the whole house of cards collapsed.
Except it kind of worked. The banks were a little bit right. If you look at how those bonds actually performed over the long haul, those bonds, for the most part, did what these criminal/idiotic bankers said they would,
right?
Which is quite interesting. The way it worked, the highest risk stuff got wiped out because it was higher risk. But the stuff that they said was this portion of these mortgages and put it into a bond, it'll be safe. It actually wound up being pretty safe, believe it or not.
Yeah, but see, the free market, right? Nothing says a free market like a $700 billion bailout from government, does it?
Yeah, we don't talk about that.
You know,
we have a free market. We have American ingenuity. I don't even know what bailout you're referring to, quite honestly. It doesn't sound like something that Americans would do. It certainly does not sound like something a Republican president would do under any circumstance.
And that was not unique to the United States either. We bailed out banks to hundreds of billions in Europe, across Europe also. And the very famous one in Ireland was the Anglo-Irish Bank.
Right.
That collapsed billions in debt. They held a lot of property essentially as assets. And that property became valueless. So did the bank, essentially. So
that is the funny thing about banks, is that there is kind of a level of understanding of banks where you just go, oh my God, I don't want anything to do with this. Because what they call fractional reserve banking is kind of nuts, where they're like, everyone's going to give us their money. We're going to tell them it's super safe. They can take it out whenever they want. But then we're actually going to loan out most of that money, give it to other people. If you went to a banker, you're like, well, what if everybody wants their money back all at once? Oh, yeah, we're screwed. Yeah, no, we don't have it. It's not here.
Yeah, and we're seeing that at the moment in private credit markets, aren't we? They're limiting what people can withdraw.
Yeah, if you're not familiar, we have private credit is a growing asset class, growing financial activity here in the United States. And the short version of it's basically non-bank lending. And there are some whispers that market is starting to have some stress. And you went through that American history lesson there, crisis after crisis. A big thing that we keep doing here is every time people come up with a new financial innovation, in the long run, it usually works out well, but it almost always leads to some short-term problems. There is some evidence that private credit is going to be the next innovation that causes some initial heartburn before we figure out how to control it.
Yes, they're saying it's a $2 trillion market.
Yeah.
That doesn't sound like a financial heartburn. It sounds like a financial heart attack if things go.
Yeah.
And I remember around the crash, you'd have the news on in the background of the office or whatever the case may be, and you were hearing about all these mortgage companies in the States falling over, and kind of nobody knew what was going on. Oh, who is this company? Never heard of them. Must not be important, until they all got very important very quickly. And again, you're the finance expert on this podcast, Vincent. You're my finance guy. I'm not, but as a skeptical politico, this kind of private credit marketing has me a bit weary. It feels like I've been here before, I've seen it before, but I'm not a financial expert. I do the politics. So.
From the outside, from a high level, that sense is a little bit logical. Private credit kind of exists for the most part because after the crash here, the Federal Reserve, in conjunction with global regulators, kind of tightened the screws on what American banks could do. So a lot of the lending that they historically did wind up moving into these other markets. And there is a case that it actually makes sense for these private credit firms to do the lending. They're not backed by the deposits of individual Americans. Their money is locked up. It comes from insurance companies and other entities like that. So there is a sense with it that it's a lot like securitizing mortgages, where it works on paper and it makes a lot of sense. And then once in practice, you get a little bit of a panic and all of a sudden you've got a big problem.
Yes. And the global financial system is so intertwined and interconnected that if something happens in one section of the market, it doesn't operate in a silo. It'll cause a cascading effect through the whole industry.
Of course. Yep. Yeah. One of the points that people make a lot with things like private credit, or even people have been worried about the size of the crypto market, which we're going to talk about in just a second. The worry that people always cite is that they will bleed over because let's say crypto collapses. The people who have money in crypto, they need to get cash from somewhere. So, well, they can't sell the crypto. It's not worth anything. So then they're going to start selling stocks or they're going to start selling bonds. So that's always the idea that, yeah, you wind up with these areas of the economy that are sick. They're not siloed. They're going to wind up infecting to at least some degree the healthier areas of the economy or the financial system.
Yes, more contagious than a venereal disease, Vincent. With these products there. You know, when you're talking about crypto there, we're talking about money that doesn't really exist. Markets never close either. I mean, you could be up at 4 o'clock in the morning trading crypto. And scams so complicated, have white papers and review notes and all this kind of thing, so.
But also scams that are as simple as it gets, man.
Yeah, but this is it. The oldest scam in the world. But I mean, now I'm going to set my stall out here, Vincent. I have about 100 bucks in crypto, right?
Yeah, okay. So I'm going to do all the talking. You have a significant conflict of interest, I think.
Yes.
Ethically, we can't have you weighing in and trying to manipulate markets.
The market, yes. Yeah. I'll be cancelled by the central bank. I think it's something got to do with a dog or something. I can't remember. It's on something called some fight.
Dogecoin, right?
Is that? Yes, it's a dog, yes. And I like dogs. I have loads of dogs.
Yeah.
But I do think when it comes to crypto, they're magical internet beans, Vincent. And they've been promising to replace banks and governments and common sense, and usually in that order.
Yeah. The flip side is crypto exists because of what we just talked about. Bitcoin is kind of the original crypto, right? And it's invented in 2008. That's not a coincidence.
Yeah, crypto is a direct consequences of people not trusting banks, what I was talking about earlier, right?
Absolutely. Yeah.
Yeah.
Yeah. So, and when you go, it's magic internet beans. And they go, well, actually, I'd rather have magic internet beans than magic Federal Reserve paper beans.
Right. Economists have been around since, go back to ancient Greece, Rome, whatever. They invented a system where numbers on screens and tablets correspond to work and resources and tangible things that you can see and hold and all that kind of stuff. And the crypto guys came along and said, what if those numbers were bigger and more inflated, moved faster, and nobody was in charge?
Yeah,
right?
That's a great summary. Yeah, it does kind of bring us back to the beginning.
I really do feel quite strongly on this, that it's I suppose, a global casino of microeconomics about money you don't have, essentially. They're inventing these things out of thin air. I mean, we could invent an Atlantic current coin if we wanted in the morning and start toting it.
There are literally companies that will do that for you now. Cost a few $100s. You can just go to them and launch your own coin. Yep.
Yeah. Based on nothing. Based on absolute nothing.
Hey, based on our sterling reputation, our global fandom, I think that's worth a couple.
Do we have any numbers of crypto usage in the States? I have some numbers from Ireland. What do you have? Show me your numbers, Vincent. Show me your apples.
I think now we're in the high 20s% in terms of adoption. But I said before, some of the numbers around stocks and stuff are fuzzy. I think the numbers around crypto are even fuzzier. But yeah, I think it's something like high 20s% of Americans now have crypto.
Okay, the number in Ireland is about 10%. Okay. Now, the 10% numbers from the Central Bank of Ireland, so I didn't pull them out of fresh air. There's a document online there if people want to look at that. But the numbers by another research company say it could be as high as 15%, and it rises to 30% if you're age 18 to 30 kind of thing. So yeah, there's an age demographic there when it comes to crypto and who exactly is investing it. So
I think that's a global thing. That's certainly an American thing.
Look, the sales pitch is decentralized finance. Okay, don't trust your banks. Trust us with your money instead. We're told the blockchain is an incorruptible, distributed ledger of human freedom and libertarianism and all that kind of jazz. But it's a public record of every time Corklad 69 bought a dog-themed joke coin at 3 a.m. is all it is, essentially, right? They talk about, how you could track everything and see everything else. But Cork Guy 69 buying Doge coins at 3 o'clock in the morning is not really particularly transparent, is it?
Well, it's transparent. I'm just not sure it's particularly interesting. I think that's always the problem with Bitcoin is the original achievement of Bitcoin from a technical standpoint, and I think from an organizational standpoint, really is astounding. The creator, Satoshi Nakamoto, which is a pseudonym, we don't actually know who it is. He didn't come up with all these concepts, but bringing all these disparate concepts together really was a work of genius. I actually don't think that there's any debate about that. But again, to your point, the fact that you can see Cork Guy 69 buying Doge is kind of cool technically. Socially, financially, does it matter is a different story. And that's always been the argument against Bitcoin in particular. What is the use case? People who are skeptical have always said, okay, this is great. Why are we doing this? What is the point? Why is its value supposed to go up?
Well, to talk about crypto being decentralized and unregulated, but it is heavily regulated in Europe. So we have something called the MiCA regime, Markets in Crypto Assets, Vincent. And they authorize who's allowed to sell these coins, essentially.
Right.
And who's allowed, what platforms allow trade and all that. And they're called virtual asset service providers. So you have to register and live inside this anti-money laundering scheme. And that's where a lot of crypto is going on. There's a lot of movement in there in, money laundering, and it's essentially being used to hide criminal assets, isn't it?
That's always been the argument. I mean, about what's the use case. Skeptics go, well, the only use case is crime. Bitcoin in particular has not proven any real utility in the mainstream legal financial system. There's a famous tweet from years ago. What's the easiest way to explain Bitcoin? And the answer is, imagine if you left your car idling 24/7 and it occasionally solves Sudokus that you could then trade for heroin, which is, that's this classic tweet. And that's always been the skeptical thing. Okay, yeah, you have this anonymous currency. Why do you need to use this? How does this help the mainstream financial system? How is this not just a matter of, I can anonymously send money for illicit activities?
There was something like a 200 billion surge into crypto in the last 2 years, but I'm not able to go to the pub, Vincent, and buy a round of drinks with it.
Right.
I've seen there's some very funny stories doing around, spouses hiding their money from their partners in divorce proceedings.
Yeah.
It seems to be another, Vincent, if she ever decides to leave you, I'll lend you my crypto wallet, will I? I don't see their function. I don't see their function in a modern financial sense even. There's no rhyme or reason to crypto, as you say. It's largely driven by social media. You see these pump and dumps all the time across social media, don't you?
Yeah, for sure. Yeah, that's one of the core problems with Bitcoin. And I think that one of the things that's telling about it, I'm a pretty big Bitcoin skeptic. Again, when it's invented by Nakamoto in 2008, he specifically says that this is supposed to be a currency. It's supposed to be a peer-to-peer currency. Now, the problem 18 years on is that just hasn't worked. As you said, you really can't buy anything with it. One of the problems with arguing for Bitcoin as a currency is that it cannot simultaneously be a good currency and also go up in value. You don't want to spend something that's going to go up. And you actually see the best example of this literally at the very beginning, which is the first real world use of Bitcoin as a currency is in May 2010. I don't know if you know this story. There's a programmer and he bought 2 Papa John's pizza.
Oh, yes.
He bought 2 Papa John's pizzas for 10,000 Bitcoin. Right now, 10,000 Bitcoin is worth about $690 million.
Whoa.
So again, the whole point of a currency is it's supposed to be stable. And so what has happened in the last few years is people who are pushing Bitcoin, they have stopped calling it a currency and they go, oh, well, it's a store of value. It's like digital gold. Fiat currency loses its value. Bitcoin, because of how it's set up, because there's a cap, there can only be 21 million Bitcoin. It's going to keep its value or see its value go up. And that in and of itself in the financial world, I can tell you, is a kind of a red flag. When somebody tells you, oh, you should do this for this, and then the market does something and they go, oh, no, well, actually, no, here's the logic's completely different. Well, it's not great that you just completely changed a currency and a store of value are not the same thing.
Yeah, but it's when you talk about logic, it's social media logic, isn't it, Vincent?
Yeah.
It's the herd mentality. Now, Vincent, the UK government has a Bitcoin reserve. Did you know that?
I did not know.
Well, let me tell you how they got it, my friend. So a couple of years ago, they seized 61,000 Bitcoin worth about £2 billion. And the reason they found all these magical Bitcoins was that a Chinese takeaway worker was trying to buy a house for £25 million and they caught her with all these Bitcoin. She couldn't explain it, the usual stuff, I did it myself trading. But she was working in a takeaway and now that Bitcoin's worth £5 billion. And that's literally the United Kingdom's Bitcoin reserve, is because they seized it all from this Chinese lady working in a takeaway. So
that's wild. The U.S. government does have a stash of Bitcoin that has been accumulated from various seizures and confiscations, and that was one of Trump's campaign promises, to create a strategic Bitcoin reserve, which itself just kind of gets to the idea of just the silliness that does get associated with crypto. Like, there's actually absolutely no point to that.
And he's pardoned Binance, a popular crypto trading platform.
Yep, CZ, the founder. Yep.
Yes, he was getting charged with money laundering, financing terrorism, all the bad things in the world, and Trump went to pardon him.
Yeah, he pivoted pretty hard into crypto in 2024. You can see a lot of reasons why that might have happened. His sons have moved into crypto. You've talked before about how much money Trump has made this term. I think the running tally is like $4 billion, and most of that's in crypto.
Pump and dumps.
There also is a little bit of a political aspect to it. People in crypto tend to be more right-wing in the U.S. because they're against fiat, they're against institutions. They kind of almost by definition at this point have to not trust institutions, and that obviously is going to kind of push you, if not necessarily to the Republicans, away from the Democrats, right?
You said fiat there. To our listeners, what is fiat?
Fiat is just basically government money, paper money. Crypto people make the point that it constantly loses value over time, and crypto is the way to avoid that.
You said their fiat money always loses value. Crypto always seems to be losing money as well also. As of early 2026, roughly 1 trillion in value has been lost in crypto.
Yeah.
Which is not an insignificant sum in itself, Some like 50% of everybody that's traded crypto has lost money at some stage. So.
I mean, it's been hugely volatile. There's also been a lot of scams, and there have been pretty terrifying, pretty brazen physical attacks around crypto people. There was a gang here in the United States that went from house to house and basically tortured people who had substantial crypto holdings into giving up their wallet. They were finally caught. There was a notorious case in Manhattan last year of a guy kidnapped in this fancy penthouse, same deal, kind of tortured, and to give up his crypto keys, basically, if you have the keys for Bitcoin, it's basically the string of letters and numbers that signs ownership of those Bitcoins. It can be stolen and theoretically not traced. So they call that the $5 wrench attack. It's based on an old cartoon about how safe crypto is technically, but you can buy a wrench for $5, hit somebody over the head with it until they give you your keys. That's kind of the security flaw to it. But yeah, and there's the sense of it being a scam, I think, is just kind of so embedded in the ecosystem. You have meme coins. Trump and his family put one out. Yeah, Trump, they did a Melania and a Trump meme coin. And those are, people call those scams. They're kind of not, because I do think those are something where everybody playing the game at least knows the rules. We know by definition, what these coins are. We know that they don't have any usefulness. People know with those coins that it's basically a digital game of musical chairs. But with things like Tether, which is the largest stable coin.
What's a stable coin, Vince?
Stable coin is just, it lives on a blockchain, but it's instantly redeemable for $1.
Okay.
So it's basically a way to get dollars into crypto and out. And Tether, Tether is just an unbelievable story. There's a book called Number Go Up by a Bloomberg reporter named Zeke Faux, Faux, but one of the best books I've ever read. But it's an infuriating book because Tether is used for all sorts of scams. It's a running joke in the financial world. They've been promising auditing financials for over a decade, and they just refuse to do it. And everyone's trying to figure out what they are. There is a shady, scammy side to it that you really can't ignore if you pay any attention at all.
Well, I mean, you look at Binance, okay? In recent weeks, they've been accused of financing the Iranian regime.
Yeah.
Via crypto. This is how important crypto is in the world economy because it is so entrenched now in the world economy. I don't see it. I don't see how the global economy can cut off crypto because it's so embedded in the system, the financial system now. It's been well documented by the Financial Times, the New York Times, take your pick of venerable institutions, have reported on Binance has been funding all the bad guys in the world and Trump went to pardon them.
I think the one place where you can point to a positive impact from cryptocurrency is you brought up Iran. People in those kind of regimes, we do have documented evidence that they have used crypto as a way to kind of protect themselves from surveillance. Iran, Venezuela, people who have some assets have been able to get them into crypto and kind of keep them protected and keep them away from the eyes of the surveillance state. But at the same time, it's brought a lot of heartache. It's brought a lot of problems. And at some point, someone in the industry actually needs to deliver something that is not just, oh, this is money, but hidden.
Yeah.
There is, to this point, still a little bit of a smoke and mirrors thing to it. And I think a lot of the justifications for it are much more self-serving rationalizations for wanting to play in the casino than any real evidence that it's changing the world.
As you said, 2008, 20 years on, almost from the crash. If the first 2 decades of crypto was about escaping the system, now they're trying to weld themselves to the system, are they not? That's it.
Yeah. There is something there.
It's been regulated, reported, or, you know how it's absolutely part of the system now. And the crypto guys would tell you, no, it's not part of the system. It's part of the system because it can be taxed.
Yeah.
If it can be taxed, you're absolutely part of the system, whether you like it or not.
Yeah. It was very funny in 2024 seeing all these Bitcoin, they call them Bitcoin maxis. That's what they call the true believers in that industry. All of a sudden jump into politics. Right? They spend 15 years going, oh, Satoshi's a genius. He built this currency. It's completely outside the touch of governments. It's a complete libertarian fantasy. And then all of a sudden, Trump turns a little bit towards Bitcoin and they're on their knees sending them money to build a Bitcoin strategic reserve and all that, trying to influence government policy to help cryptocurrency. And you're like, man, as you're so fond of saying, I think there's a word for that. But
yeah, but I mean, you can dress it up. They could put on fancy fishnet stockings and some fancy lingerie and dress it up in the language of, freedom and decentralization and all that. But at the end of the day, crypto is just another way of turning hope into a financial product,
Yeah.
And a financial product probably into a funeral.
So far, it's a gambling game. I know we have some crypto adherents listening, and I've known more than a few in my life as well. But I think we have kind of reached with crypto the show me stage.
Yeah.
When someone asks you, what is the use case for this? You need a better answer than, oh, it used to be a currency and now it's digital gold. Oh, it's not acting like digital gold. So try again.
And absolutely, I ask somebody in the crypto space, is this the future of my savings as well? And wait for the silence. I mean, Vincent, if there's a moral here, right, and it's probably one of the oldest moral stories going back to the foundation of humanity, if something sounds too good to be true, it usually is.
There's a little bit of that. I mean, the one thing you do have to say for crypto people, though, you can sit there and say, oh, this stuff is silly. They would point out they have made a lot of money. Even with the crashing.
Exactly, to have you.
Somewhere on the internet, there's an article I wrote that said Bitcoin at 6,000 was silly and you should sell it.
Right.
So if there's any Bitcoin adherents listening who are getting mad at me, there you go. You can send me a tweet or an email through the website and tell me, nah, I'm still up 10x and you own a pineapple company. I think an interesting way to close, to kind of bring this full circle about the different sentiment, is crypto is a part of a trend in the U.S. And we referenced this a little bit in the episode on Friday. It is part of a trend in which the line between investing and gambling is really getting blurred.
Yes.
And, you kind of talked about private credit and that idea that when the financial system comes up with something new, it often leads to trouble. There's a similar sense towards how the retail investor is acting among people who have been in finance for a long time, that this kind of aggression, this kind of optimism, the share of American assets in the stock market is at an all-time high. History suggests that this is not always the best thing. But even socially, there are people who kind of keep coming out and saying the attitude, particularly of younger Americans towards money, even towards finance as a whole, is concerning, and it tells us some things. So we have crypto, which, again, whatever your long-term belief, in the short term, there's a gambling aspect to crypto. I don't think that's up for debate. There is a core enjoyment of being part of a community and being part of the game, of seeing the chart go up and down. In the stock market, we had this whole crazy meme thing back in 2021, which has lingered on in various forms and popped back up with GameStops. And I know they did in Ireland too. Even the Irish Times covered it at the time. And yeah, we're striking back against Wall Street. But again, I think that too, people wanted to play the game. The chart went up super fast. Everybody wanted to jump in and play. We have things called zero DTE options, which means 0 days to expiration. You can buy these options through sort of the regular financial system in the U.S. through a standard stockbroker, but you're basically betting on where this S&P 500 is closing that day.
Yeah.
Nobody has any edge in that. No one. Not even like professional traders. So these are just gambling products that you can buy in retirement accounts, and they are huge. We're seeing in places like South Korea, people just going nuts with these sorts of gambling things. India's had a huge options market where individual investors are doing that. We have meme stocks. We have meme coins. The line, again, we've talked about this last week. The line between investing and gambling is getting blurred. You can go to your investment product and literally gamble through prediction markets, and even the investment products that people are buying in the market seem to be high risk, and in some cases are just gambling.
Vince, why do you think this is happening in terms of, just massive risk?
Yeah, as always, I think there's a couple stories you can tell. Old skeptical guys like me would just say, this is kids. They're on social media. They want to dress their stuff up. The kids themselves would tell you, look, we don't have any choice. Everything's expensive. We can't afford to buy a house. We can't afford to live where we want. We can't afford to have kids. We need to take on some risk and see if we can make a bunch of money up front, because that's the only way that we're going to kind of have, the American dream. That's the only way we're going to come in ahead of our parents.
We're seeing a similar trend in Ireland. People taking bigger financial risks. Vincent, do you believe these people when they say that?
I'm a little bit skeptical that you've diagnosed the problem correctly when your solution is just to randomly and wildly gamble with no edge. It's like somebody saying, my wife sucks, I'm going to murder her. Well,
oh, no.
I guess it's possible that your wife is that bad, but judging by your chosen solution, I'm skeptical that you've diagnosed the problem correctly, right?
Exactly,
I'm thinking it's you, not your wife. So when someone goes, I can't afford what I want, I have to go, spend wildly on 0-day options. I mean, to me, there's part of it that looks at it, go, I think more you just want to gamble. And it's a lot more fun to gamble with the rationalization. It's more fun to own Bitcoin and say, this is a blow for financial freedom for dispossessed people across the globe. No, come on, man. You just want to make money. You're no different than the rest of us. So I think there's a little truth to it. But at the same time, again, it's probably not going to work for you. You're not beating the options market when you're 21 and don't know what you're doing.
Yes, cryptocurrency is what happens when you give a teenager a laptop, too much time and some spare change, and they stick it in the online slot machine, essentially. These are monetary policies, right? Set up by a bunch of guys who think, bull runs and bear runs are a lifestyle choice as opposed to, serious financial analysis and investment, isn't it? So,
yeah, there is something that feels a little light to crypto. ironically, given how technical it is and given the fact that there are people in that space trying to do things that require real genius and real understanding. At its heart, though, there is kind of a sense that this isn't really serious. That just might be me being too old, and just not being able to appreciate the possibilities, being stuck in my ways, and they'll all prove us wrong. But yeah, the clock's ticking, guys. Let's go. Show us something.
Well, Vincent, as I said earlier, until I can go to the pub and buy a round of drinks with my cryptocurrency, I refuse to take it seriously. So, I'm Tull from the Irish Politics Newsletter.
I'm Vince Martin from Wall Street in Maine.
Yes, thank you. Bye-bye.